Old Dominion Freight Line, Inc., NASDAQ. ODFL Due Diligence Report Date, September 2025. Executive Summary. Old Dominion is a leading U.S. less-than-truckload LTL carrier with a national network and strong focus on service and yields. Q2 2025 revenue, $1.41 billion, down approximately 6%. YoY and EPS, $1.27, slight miss versus consensus. Trailing 12-month revenue, $5.6 billion, reflecting modest contraction from prior year levels. Market cap, $31 to $32 billion, early September 2025. Dividend, quarterly payout 28 cents. Share annualized $1.12. Yield approximately 0.7 to 0.8%. Steady dividend growth with a low payout ratio. One company overview and business model. Core business, less-than-truckload LTL freight. Pickup, consolidation, line haul, terminal handling, and final mile delivery across the U.S. Differentiator. Dense network. Premium service, focus on yields and on-time performance rather than competing only on price. Revenue drivers. Yields, price per hundredweight volume, tons, miles, and network utilization. To industry and market position. Industry. LTL freight, a niche within the broader transport logistics sector. Highly cyclical and volume sensitive. Position. Top-tier LTL operator with a national footprint, strong brand, and superior service reputation. 3 revenue streams. Core LTL freight charges, accessorial fees, fuel surcharges, handling, residential delivery, ancillary logistics, value-added services for competitive advantages. National network density, enabling efficiency and service reliability. Strong unit economics when volumes hold. Reputation for premium service and disciplined management culture. 5 scalability scales with network density and incremental capacity. Short-term scalability limited by cyclical freight volumes. High fixed step costs mean profitability swings with demand. 6 financial statement analysis. EPS, $1.27. Tons per day declined approximately 9% YoY. Operating cash flow was strong at $286 million. TTM revenue, $5.6 billion, down versus prior year. Balance sheet, modest leverage, strong cash conversion, asset-heavy structure typical for LTL carriers. 7 key valuation metrics approximate, September 2025. Market cap, $31.33 to be. PE mid-teens to low 20s depending on trailing versus forward earnings, EBITDA, and PS. Reasonable for sector but sensitive to demand swings. 8 growth potential and TAM U.S. freight market is massive. LTL is a growing niche. Tailwinds. E-commerce demand, reshoring, freight density improvements. Growth drivers. Market share gains, pricing, yield strength, selective expansion. 9 competitor landscape. Main peers, other large LTL carriers, and regional operators. Competition. Service quality, network density, pricing, and capacity discipline. 10 management and governance. Management historically conservative with capital, focused on returns, emphasis on service, yield discipline, and cost control. A track record of prudent dividend and buyback policies. 11 risks. Volume risk. Cyclical tonnage declines compress revenue. Pricing risk. Fuel. Labor inflation may outpace pricing adjustments. Capacity dynamics. Oversupply in trucking can trigger price wars. It's macro exposure, tied to manufacturing and retail activity. Operational risk. Labor shortages, accidents, terminal disruptions. 12 dividends, shareholder returns. Quarterly dividend. Lingdan Arbeimayen. Share annual Edan Yarmayen. Yield approximately 0.7 to 0.8%. Low payout ratio leaves room for growth. Occasional buybacks when valuation and cash flow allow. 13 insider and institutional activity. High institutional ownership, typical of large cap industrials. Insider trading activity has been limited and not unusual. 14 technical analysis signals. Stock recently sold off after Q2 earnings miss. Price action sensitive to freight cycle news, tonnage reports, and macro data. Volatility expected around earnings and economic releases. 15 recent analyst ratings and news analysts cautious after Q to miss, citing volume declines. Near-term sentiment tied to freight demand recovery. Long-term ratings still lean favorable given market leadership, investment thesis, bull case. Market leader, efficient network, pricing power, and high-quality operations. Positioned to outperform in a freight recovery, bear case. Cyclical downturn persists, volumes and yields remain weak, valuation pressured. Key catalyst to watch freight demand recovery and tonnage per day trends. Yield versus volume balance. Cash flow strength relative to capex. Sector capacity and pricing discipline. Dividend buyback updates.